Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw more tech weakness. It's been a big week of earnings for tech companies, Ken, and the fun or the bloodbath continues after the close today with more reports out. We'll get to that soon, but what are the stocks we're going to be looking at today?
Well, we're going to take a look at Constellation Energy, and colleague Kit Norton did a great New America story on Constellation Energy recently. CEG had a nice upside move today. Also in the financial sector, take a look at Raymond James, which had a good day after reporting earnings. And finally, I want to revisit AMN Healthcare, which is setting up ahead of next week's earnings report.
All right, well, we'll get to those, but first, let's take a look at the major indexes. As mentioned, tech getting hit hard today. The Nasdaq Composite down 1.6% today. The S&P 500 down at 0.6%. On the upside, we did have the Dow up some 0.6%, and headed into the close, the Russell 2000 looked like it was going to eke out a gain of about 0.25%, but finishing flat for the session here. So, Ken, your thoughts on what we're seeing here? Is this just a pause in the market rally or something more significant at this point?
Yeah, I mean, it could be a pause. We did get a distribution day on the Nasdaq yesterday on Wednesday, and to see a distribution day so soon after the sign of strength that we saw on Friday was a bit disconcerting. And then it was Meta Platforms today, which fueled another big sell-off in tech. But you can see the Nasdaq, at least right now, is trading pretty close to its 21-day moving average. If it can kind of consolidate above this 21-day line and not decisively break below it, I think that would be a good sign. But we're seeing some pretty rough earnings reports in after hours trading. We'll see how the Nasdaq opens tomorrow. So I think we kind of got a warning shot from the market yesterday. The one thing, Nasdaq volume today looks like it's going to be quite a bit lower than what we saw on Wednesday. So we'll avoid one of these higher volume declines. Both volume on the Nasdaq and NYSE look to be lower. So that's a small silver lining. But there was a lot of damage underneath the surface today. A lot of stocks down 5, 6, 8. 9%. So,
yeah.
And the other thing about the Nasdaq breadth, which was interesting, was just talking with David Chung, is that advancing stocks were pretty much even with decliners. I think by the close, maybe decliners might have had a slight edge, but Nasdaq breadth was surprisingly strong today, considering the big percentage decline.
So you mentioned the Nasdaq is hanging around right around its 21-day moving average, and we were talking about that being a level we really want to see it hold above. So hope is not lost here by any means, but it's not like we want to see too much more of these gains being given back at this point.
Yeah, exactly. But, unfortunately, it's kind of large cap technology stocks, earnings reports from large cap tech that's dictating the action right now. So we'll hear from Apple a little bit later today, but looks like Amazon's a little rough around the edges. So we'll see.
Yeah, to put it nicely, Ken, because shares down over 17%. Yeah, we had Meta finishing the day down 25%, and now Amazon after hours down some 17% on the report. So that's not good. But let's take a look at the S&P 500, which has been faring better in this market rally in Wednesday's session, hitting resistance at the 50-day line, and same today, resistance right at that level. It looks like we are holding right around the highs from early October. That seems like an area we'd want to see it hold above, but is that asking too much?
Well, you have a lot of strength in oil and gas stocks, outperformance of oil and gas stocks that are sort of buoying the S&P 500 here. But not surprising to see it get turned away at its 50-day moving average here. I mentioned lower volume today on the NYSE, so that's good to see. But we could just kind of buy time below the 50-day moving average as long as we can kind of sort of curtail this 2-day decline and maybe just kind of hold here and move sideways, that would be preferable. That could pave the way for a nice retaking of the 50-day. But that could be a tall order at this point. I think the message for investors right now, even though we started to put our foot on the accelerator after Friday's follow-through day, maybe time to just kind of take it easy, take the foot off the accelerator, just kind of assess some of your new buys and see how they're doing. But yeah, conditions are a little suspicious all of a sudden.
Okay, next on our list, let's just take a quick look at the Dow and Russell 2000. So here is 0DJIA on MarketSmith. The Dow up today, getting pretty close intraday to that 200-day line, Ken.
Yeah, this, you're looking at the Dow, several up days in a row, and it gave back a lot of those gains, and looks like it closed right around that 32,000 level. But a lot of good earnings reports in the Dow today that was boosted sentiment. You had Honeywell, Caterpillar, McDonald's, Merck, all did well on earnings. So that was sort of the cushion for the Dow today. But this is a really, really big run off of lows after hitting that low of 28,660. So wouldn't be surprised to see it consolidate here around the 32,000 level, and we'll see if it's a healthy low volume consolidation. That would be nice to see.
One could only hope. Okay, let's also take a look at IWM. Here's the Russell 2000. So far, holding above its recently retaken 50-day line, getting closer to the 200-day line. We also like checking in on that 10-year Treasury yield continuing to come off today. So one would think this would help be that fuel for a market rally. But, even though we're seeing good action on this chart, you have that earnings season. So I guess those are, battling forces right now for the overall market direction.
Yeah, the 10-year yield below 4%. Looks like it's right around 393, 394. So kind of testing support at the 21-day moving average here. Now we did have strength in the dollar, which kind of offset this weakness in Treasury yields again. But you can see the UUP ETF gave up the 50-day yesterday, rallied today, but it's still below the line. So we could see the UUP at a point here where it's ready to consolidate a little bit instead of just hitting new highs on a daily basis. So if it can consolidate and we can get both the 10-year yield and the U.S. dollar sort of just taking a breather here, that could be a boon for stocks. But again, just market action over the past couple days is a little cause for some concern.
Yes. Okay, well, let's take a look at Constellation Energy, because this is not a cause for concern. This is a bright spot today, a big winner in today's session with shares up 4.8%, above average volume. Another thing that we like to check off on the list here, we've got that RS line blue dot underscoring the stock's market outperformance for this breakout today.
Yeah, and this is a recent spinoff from utility giant Exelon earlier this year, and mentioned one of our writers, Kit Norton, did a great New America story. So you can go to investors.com and just enter CEG in the symbol area and pull up this story. But like I mentioned, they're the largest nuclear plant operator in the U.S. They bill themselves as a clean energy firm. So this is just a beautiful breakout today. Pretty impressive to see this when the Nasdaq was down more than 1%. Had good volume behind the breakout. Earnings coming up in a couple of weeks, but this is just an example of a stock breaking out of a flat base and closing near highs. So pretty clean breakout, it looks like to me.
Mm-hmm. Yeah, we'll have to see if this can hold up, or if we're going to start seeing more breakout failures. Only time will tell. We've also been talking about financial related stocks. So here's a look at Raymond James, RJF, with a big breakout of its own today. Shares up almost 7%, strong volume behind the move. And that strong volume isn't something that we saw only today. In the lead up to this breakout, we also saw above average buying.
Yes, so this is what a stock under accumulation looks like. You've got the stock rising with a lot of above average volume price gains. Now you've got 4 straight gains headed into today, and then a big percentage gain today. So even though this stock is technically in that blue shaded area, it's still in that 5% buy zone. Be careful about chasing it up here. Now, ideal price action from here would be to see the stock hold its gains, maybe trade above the 110 level, just start to move sideways. So I'd be cautious chasing it after 5 up sessions in a row, but the heavy volume behind the recent move tells me that there's some big buyers, big institutional buyers in here, so that should provide support for the breakout.
Okay, and last but not least, let's take a look at AMN. AMN Healthcare Services has an RS line blue dot today, held up amid the broad market weakness, up 0.8% here. So carving out the right side of the base, it's above a round number at 120. Where's the buy point, Ken?
Well, so they report earnings next week, Thursday after the close. So earnings report is coming up. So right now, Market Smith is just recognizing this as a consolidation, but you can see the downside reversal yesterday could be the start of a handle. But on the weekly chart, it's just kind of like a little. Just a cut base forming here. That dotted line is just kind of noting where the prior high is. So we could start to see AMN drift a little bit lower ahead of earnings next week. Lots of stocks that could make sense for call option trades. We just want to make sure we're not paying too much for the premium, but this isn't a setup that would lend itself well to a call option trade. Just depends where the stock is trading. Next week before its earnings report late Thursday, but it's in a good industry. It's in a good business.
Really staffing. Strong numbers. I mean, look at this.
Exactly.
Quite a few quarters of triple-digit bottom line growth. Really strong top line growth.
Yeah, and I think this is sort of an acquisitive company, so they like to make acquisitions. But it's got a composite rating of 97, so that tells you right away it's strong fundamentally and technically. So this is one I'll be watching next week, headed into earnings, and to see that relative strength line in new high just shows you that it's a strong stock in this market.
Yeah, and speaking of the technicals, Ken, what are your thoughts on the volume profile here? I mean, if you go back a year ago, we saw some pretty concerning price and volume action here. Do you think enough time has passed and we're seeing enough blue volume here to negate that prior action?
Yeah, I do, and really, I'm focused on this last several weeks of consolidation. So you do have two kind of down weeks in heavy volume recently. That right there, and then the one just before that. But then following that, you had two higher volume weekly gains. So I think overall it looks it looks pretty good. It's I think overall the technical picture is pretty solid here.
All right, fantastic, Ken. And we got to get your quick take on some earnings. We looked at Amazon at the beginning of the show. It is now down about 19% here. We're still waiting on Apple. Usually they report 30 minutes after the closing bell. Right now it's down about 1.3%. Since I'm in the newsroom, I might as well give a shout. Ed, any other earnings movers we should look at? Oh, for solar, good call. So FSLR down 7% here. Let's see, Enphase, which already had its report out, only dipping a smidge in sympathy here. But yeah, First Solar, we'll have to see how that goes because, Ken, this is a setup we've been keeping tabs on. Now it looks like down about 4%. 4%, 7%, swinging around.
I mean, the market's response to Enphase's earnings was very, very solid, and it actually extended gains today. So, need to kind of look into First Solar's numbers here and find out why the stock is down sharply. But this, along with Enphase, are the two big leaders in the solar group. So, Enphase still acting just fine. In fact, we put that on the leaderboard watch list today. We don't think it's ready yet, but just like the quality of the earnings and like the follow through today. So we'll see if this can fully base out, and it could find a way onto the leaders list. Now we just have to hope at 1:30 Pacific time that Apple's going to save the day and somehow pull a rabbit out of its hat. But this large cap tech earnings environment not very good right now.
Yeah, it's been quite a bloodbath. All right. Well, thank you, Ken. And thanks also to Ed for the assist there. We will be back with more tomorrow morning on IBD Live, where we will be joined by Brian Shannon. It's always great to have him on the show and get his take on technical analysis using his anchored volume weighted average price analysis. So looking forward to that. We'll see you there, investors.com/IBD Live for all the details. And we'll also see you right back here at the close to cap off the week.